Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday, the US dollar rebounded after the US employers hired a solid pace in May, but wage growth was somewhat a little bit sluggish. According to the Labour Department's closely watched report, showed that the non-farm payrolls rose by 390,000 jobs last month, and wages grew just by 0.3%, while the unemployment rate held steady at 3.6%. From the jobs report, the US Federal Reserve appears on track to raise interest rates by half a basis point, or 50 basis points that is, at each of its two meetings. However, the September meeting is a little bit uncertain at this point of a rate rise. From the US job numbers, we can see that the Australian dollar took a challenge back to that top side of the range around 72.60-65, which is also seen as where the 60-day moving average is, and was rejected. However, not quite broken down as of yet. The market opens up around 72 cents this morning and still remains above the midway point. While this is intact, along with a slightly firmer MACD, I feel we could see one more challenge to the upside as all eyes turn to the Reserve Bank of Australia's policy decision on Tuesday. At present, a 25 basis point hike is expected. However, as the rate stands at 0.35, some reports are looking for either 15 or 40 basis points, which would take it up to 0.75 or up to 0.50. Nevertheless, the market will be keeping a very close watch tomorrow at 2:30 for the rate decision. Any pullback for the Australian dollar at present sees a support around 71.45. Looking at the euro, the market still remains capped. That is around the top side level, around 107.85. After seeing at least two attempts at this level, the market still holds and is respected. As I mentioned earlier, the dollar index did bounce slightly and recaptures the 102 handle. Therefore, I feel that while the dollar index still holds up, that we could see a small pullback, that is towards that bottom side of the range, anywhere from around 106.25.30, and reassess from there for the start of the week. However, the MACD is still positive, but the RSI is a little bit mixed as it balances on the midway point where the RSI is. The dollar yen still maintaining its bullish structure as it rises further towards that top side around the region of clearing 130 and 35 and now looking to around that 131 level, which was the recent peak back in April and also back in early May. One thing to note though, that there is bearish divergence and therefore could see a rejection from that top side challenge and look back towards the region of the low 130 to 129.5. Sterling slightly on the weaker side as the market retreats from that trend line, which is still holding roughly around 126 figure 45. In light of the pattern, the market is weaker to the start of the week, and therefore let's see how we see our performance from the region of 124.15.45 and see if that market can rebound again. I'm keeping a very close watch on the RSI as we could see a rejection and therefore look through the trend line and on towards 127 as a potential target. As there was much talk still that the Bank of England may lift interest rates by 50 basis points on its meeting on the 16th. So all eyes on that top side level. We just draw in a little bit more. You can see that it is quite crucial, and therefore a break here should give the bullish pattern a little bit more confidence. Looking at sterling Kiwi, still seeing a weaker play, although we have got an inverted hammer close to the peak, that is at around that 191 area. As long as we maintain above there, then I feel the market may stage a small recovery. But if we see a break, then that would open the way back towards the lower side of the range, seeing around 189 as a potential target. Finishing up with gold and oil, the market stays the retreat once again from that 1,880 level, and from the retreat still looks a little bit weaker into the start of this week, and therefore I'm looking for a move back towards that bottom side of the range, anywhere from around 1,838, and maybe if we see a break there, then further to 1,788 to 92. While the top side is contained, that is around 1,880, then I feel the market should pose a further downside threat. Finishing up with oil, the market is again pushing higher as it now reaches back in towards those February highs around 120 to around 125. The market, or 126 should I say, the market still looks somewhat strong due to the fact is that there is still uncertainty when it comes to supply on oil, but I'll be keeping a look on this support level, which is around 115.5 at the moment. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report and also the end of the day wrap.